Live from Dubai, this is Bloomberg Daybreak Europe. I'm Jumana Bersachi with your top stories. Asian stocks and U.S. futures edge higher after benign U.S. inflation reinforces bets on more Fed rate cuts. In Japan, the yen slides after data shows the economy barely grew in the latest quarter. Marco Rubio heads to Hungary. America's top diplomat says Europe's fate is intertwined with the U.S., but accuses the continent of drifting from shared Western values. And the plot thickens. Bloomberg learns Warner Brothers is considering reopening sale talks with Paramount Skydance, potentially igniting a second bidding war with Netflix. We'll bring you our scoop. And a check-in on markets. We had that benign inflation print in the U.S. on Friday. S&P futures leaning towards positive today, up about 0.1%. But, of course, many markets are closed today. The U.S. markets as well will be closed. Cash markets, that is, U.S. President's Day in the U.S. So thinner trading than usual. European markets basically trending sideways here, keeping a close eye on some of the geopolitical headlines that came out of the Munich Security Conference this weekend with a real reevaluation of that transatlantic relationship. And then gold slipping today in sessions below $5,000 an ounce, about 1% weaker on the day today. And of course, traders use that weaker than expected inflation print on Friday to trim some of the profits for the week. And in terms of risk events to watch out for today, as I just mentioned, most Asian markets are closed for Lunar New Year. We have Chinese markets on holiday essentially for the next week, a half day today for Singapore and Hong Kong. Japanese markets, though, are still open, so we're going to talk more about that shortly. And then a whole slew of earnings to watch out for in the mining space today. Watch out for BHP today, Antofagasta Tuesday, Glencore, Rio. All of those are coming up later this week, too, on back of what has been a record melt-up in both precious and industrial metals. So we'll see how that translates to their earnings. And then a big one for the UK. We have UK CPI data coming up on Wednesday. I do want to flag, though, the UK inflation number is seen to be easing to 3% from 3.4%. However, the basket does get reweighted with this print, which means that forecasting becomes slightly more difficult. So keep an eye on that for any potential anomalies with that UK inflation number later this week. And those are your risk events. Let's get started. Well, Chinese markets are closed, but Japanese markets are open. The yen softening after Japan's GDP came in much weaker than expected, underscoring the case for Prime Minister Takaichi's proactive spending policies following her election triumph. Let's get more now with Bloomberg's Asia Equities Deputy Managing Editor Balazs Pans. Balazs, quite simply, how should we be reading this weaker than expected Japan GDP number that came through?
Yeah, the number, Joanna, was much lower than expected, and this comes on the back of a pretty deep contraction the previous quarter. So as you said, it reinforces the view that Prime Minister Takaichi will embark on a fiscal expansion, will step up spending, and that reinforces what has been the dominant trade for Japanese assets this year, the so-called Takaichi trade, which has been positive for equities and more negative for the currency and for bonds. So it does look like there's more room to go there. And when it comes to the expectations for how it might affect the BOJ and its plans to further increase interest rates, so far the view is that this is temporary, and this will not kind of stop their plans to increase interest rates again, especially when we take into account the potential for fiscal expansion there.
And let me ask you a China-specific question. I know Chinese markets are closed for Lunar New Year, but we did see a reaction in extended trading amongst Alibaba, BYD, some of the companies added to a Pentagon list that was later withdrawn. What are the details around why these specific Chinese big names were added to the list?
Yeah, these are some of the biggest names in Chinese tech. Alibaba, Baidu, BYD were in a group of companies that were added to a Pentagon list of Chinese firms that they consider to be working with the Chinese military. Now, this addition to the list in and of itself doesn't do anything, but it might make it more difficult for U.S. companies to do business with their Chinese counterparts. And what it does is it can lay the groundwork for future steps, further steps along the way that may be more difficult, maybe more serious in their scope. Right now, the Pentagon has withdrawn that list, and we're not exactly sure what's happening there. It sounds like there are some internal deliberations within the White House in terms of which companies should be on that list, which companies should be pulled from that list potentially. One sector we're really keeping a close eye on when it comes to that list is the memory chip makers in China. But we did see a pretty significant market reaction, and it does show some consternation, some potential risk as we gear up to that important meeting between President Trump and President Xi in China coming up in April. It sounds like whatever is happening, the White House is trying to send some sort of a message to China.
Bloomberg's Asia Equities Deputy Managing Editor Balazs Pens, thank you so much. Well, let's go back to broader markets now. Bonds are gaining, equities are steadying after benign U.S. inflation reinforced expectations that the Fed will cut interest rates this year. There's about 60 basis points worth of rate cuts priced in. Let's bring in Mark Cranfield, Bloomberg Markets Live cross-asset strategist. So a lot of anticipation to that CPI print on Friday. Of course, we do get PCE data this week. We've got the Fed minutes as well. How much is the data this week likely to influence the Fed's course of action?
What investors are reading into this is that there's a very high bar for them to see the Fed doing anything other than keeping rates on this path towards the next rate cut. So what you've seen this month basically is Treasury yields have continued to come down because investors are very focused on the data which will lead to the potential for the next rate cut from the Federal Reserve. So the retail sales and the CPI were the ones that they've really jumped on. And to some extent, they've ignored some of the other data, which doesn't reinforce that messaging. So that's why this week, the core PCE data, particularly the quarterly numbers, these are the ones that the investors will be most focused on, because that's the one that's, if anything, is going to be the follow through to the inflation data from last week. There is a GDP number is expected to be reasonably good, around 3%. We have the Fed minutes, but we already know that they held rates in January, and that the Fed wasn't unanimous in that. There were a couple of dissenters, and we would expect more dissent in the coming months as well from the Fed. So that's not really a surprise. So where investors here, they're setting a pretty high bar for numbers that are going to be strong enough to derail the Federal Reserve from pricing in lower interest rates. At the moment, traders are going towards 3 rate cuts for this year. Previously, it was 2. Yeah. So that's really where the dynamics are. If the PCE confirms the chance of 3 rate cuts, bonds will have another very good week.
Yeah. I want to take you down a different tact as well. There's been a lot of coverage about the so-called tech route, especially in software stocks over the last couple of weeks. Perhaps maybe less focus on the credit side of things as well. Really interesting story up on the terminal over the course of the weekend, suggesting that traders are now looking for ways to hedge their credit exposure to some of these hyperscalers by virtue of how much debt that they're bringing to the market. So just walk us through exactly what is happening in the CDS landscape right now.
Well, this is where you get real tail risk in a market, because the credit derivative market is obviously much smaller than the equity market. And you've got these big tech companies who are needing to borrow a lot of money for their data investments, and the numbers have been going up substantially. And if you look at the recent announcements, their projections for this year are huge. This will be the biggest year of spending from the major tech companies. And they're raising a lot more debt than they used to. They've been really ramping up over the past few weeks. Now, the problem here is that at some stage, this market starts to get quite volatile, the corporate bond market, and the investors are looking for ways to hedge this. And this is called the credit derivative market, which is much smaller. But because it's a place where aggressive traders, people like hedge funds, other leverage traders, if they see a chance to exploit gaps in the outlook for a company and its actual performance, this is where they can do it at a lower cost and achieve results very quickly. So people like Oracle got a taste of this in December. Although Oracle is still making plenty of money, we saw its CDS swinging around dramatically, and that went back into the equity market and caused the shares to fall down. Now we have all the big boys, Amazon, Alphabet, Meta, Apple. All of these guys are outstanding in this market. All that needs to happen here is that people get even more concerned that the AI numbers are not adding up. If the income that's going to be generated from all these huge investments, if it doesn't look as exciting as it did just a few weeks ago, you could see a lot more people piling into credit derivatives. They will get defensive in there. This is where they take bearish positions. It will feed back into the equity market. You get what potentially is a downward spiral here. This is why everybody now is becoming suddenly very nervous about all these bonds which have recently been issued by American companies.
Though I will just say that they've been very well received by the market. Many of those issuances actually is very oversubscribed. So we'll see how this all plays out eventually. Mark Cranfield, thank you so much. Bloomberg Markets Live cross-asset strategist. Well, let's turn to geopolitics. U.S. Secretary of State Marco Rubio is to meet Hungarian Prime Minister Viktor Orban today in Budapest. This comes after Rubio said Europe's fate is intertwined with the U.S. while faulting the continent for decline in Western values. We spoke to him exclusively from the sidelines of the Munich Security Conference.
The Vice President said last year very clearly was that Europe had made a series of decisions internally that were threatening to the alliance and ultimately to themselves, not because we hate Europe or we don't like Europeans, but because what is it that we fight for? What is it that binds us together? And ultimately, it's the fact that we are both heirs to the same civilization. And it's a great civilization. And it's one we should be proud of. It's one that's contributed extraordinarily to the world. And it's one, frankly, upon which America is built.
For more, let's bring in Bloomberg's chief European correspondent, Oliver Kirk. Well, Oliver, this was a widely anticipated speech by Marco Rubio and certainly a lot more conciliatory in tone than J.D. Vance's was 1 year ago. I actually want to borrow a phrase that I read from Mark Champion on the Bloomberg opinion piece this morning, saying Rubio's packaging was much kinder than Vance's, but the substance of what he had to say was very little different. Where does this leave the state of the relationship between the U.S. and Europe today?
I think that's a fairly fair appraisal of what we heard from Mark Champion there. I mean, listen, Marco Rubio came over with a much more sort of diplomatic view in terms of the messaging towards the Europeans. And we'll remember that J.D. Vance's speech 12 months ago is really the kickoff of American MAGA 2 foreign policy. That was really the beginning of it. In the sort of 12 months that ensued, we saw things that really, I think, shocked the Europeans well beyond what they had anticipated. So I think for most of those who were attending there, you see Friedrich Merz there who had met with Secretary Rubio, everybody was sort of holding their breath until Saturday morning to hear what Rubio had to say. And I think they could say that they walked away, satisfied with what they heard from the Secretary of State. But it does not change the fundamental thesis, the fundamental premise for the Europeans. So most of my conversations at the Munich Security Conference with these sort of companies in Europe, the defense companies, with the policymakers, were really about European sovereignty and about basically developing not just your sort of spending on defense, but spending that within Europe and feeling a little bit more ill at ease depending on, for example, all the military hardware coming from the United States. And I think another thing we should pay attention to, Jumana, it's not a sort of a very frequent event that any world leader talks about nuclear weapons, nuclear deterrence. It's very rare for the Germans to talk about it. The Chancellor of Germany talked about basically nuclear policy in Germany, although he did say it was unchanged, that they had no ambitions of developing nuclear weapons. They are having sort of confidential talks with the French about the nuclear umbrella and these sorts of things. And for the Chancellor to talk openly about that, I think really gives us an indication about how worried the Europeans are, though for the moment, I would say that after that 12 months from that J.D. Vance speech, everybody sort of let out a sigh of slight relief, but fundamentally nothing has changed over the weekend.
Yeah, well, in the U.S., obviously, we've got midterms coming up this year. Lots of Democrats were also at the Munich Security Conference, which is interesting in itself. Did we learn anything about what democratic foreign policy looks like?
Yeah, so I spoke to a few people, including the Democrat from Michigan, Alyssa Slotkin, the senator there, and we were talking a little bit about basically this idea that there is a sort of MAGA America. There's the America First foreign policy. That is the foreign policy that the Europeans have been grappling with for the last year. I asked her basically, is there another America out there? And is that sort of your job as the emissary for the other America, coming here to talking to European leaders? And this is what she had to say. Have a listen.
Well, I think there's a lot of us who are here, certainly from the Senate and the House, to send the message that not everyone agrees with the approach that this president is taking, right? That my president is taking, which is kick your allies in the teeth and cozy up to your adversaries. It's the opposite of what many of us were taught and how we lived.
So that was the message there from Alyssa Slotkin, a Democrat from Michigan, who obviously has also been very sort of negatively impacted by all these conversations around tariffs. This is, of course, a big car-producing state within the United States. But, of course, there was also Gavin Newsom there, AOC, who was on a number of panels, including one of ours, talking about basically the alternatives to American foreign policy. That being said, for a lot of these leaders in the Democratic Party, this is an opportunity for them to get sort of more foreign policy chops, to get them out to the sort of public more broadly. I mean, I actually happened to be on the plane with Gavin Newsom coming here to London, who I gather is now going to be in London for a couple of days for a bunch of meetings, and asked him about his appraisal of the Rubio conversation and what his role was basically there in Munich, and what were the questions that the Europeans were asking him. Basically, they were asking him, you know, what is going on in the United States, and will there ever be a different foreign policy coming out from the U.S., even in a post-Trump era? And really also the other question he was getting a lot of, and I think this is something he's getting a bit everywhere, is why are the Democrats so weak? So sort of some interesting tidbits there as Gavin Newsom is in London, we understand, to sign a few MOUs on tech and AI while he's here in Europe.
Well, I guess fortuitous for you that you happen to be in the same flight as Gavin Newsom. Perhaps he was thinking, oh no, I'm sitting next to a journalist. Bloomberg's chief European correspondent, Oliver Crook, thank you so much for bringing us the latest from Munich Security Conference. All right, still ahead, Ukraine strikes Russia's Black Sea region ahead of peace talks in Geneva. On Tuesday, we're going to talk about that. But first, Israeli Prime Minister Benjamin Netanyahu says any Iran deal has to strip away any nuclear capabilities. We'll have the details for you next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Israeli Prime Minister Benjamin Netanyahu has proposed terms for any de-escalation deal with Iran during a meeting with U.S. President Donald Trump. This includes that Iran should not possess enriched material or nuclear enrichment capabilities and a limit on Iranian ballistic missiles.
Several components that we believe are important not only for the security of Israel, but for the security of the world. The United States, the region, the world. The first is that all enriched material has to leave Iran. The second is that there shall be no enrichment capability.
For more, let's talk to our Middle East Managing Director, Onur Ant. Well, Netanyahu was meeting with Trump last week, and I remember right afterwards we were saying there was very little press release in terms of what the two actually discussed. And now we have a bit more color about what the Israeli Prime Minister was actually pushing for. With the view that a second round of negotiations are taking place this week in Geneva, how much is the Israeli stance, Netanyahu's stance, likely to influence the negotiations this week?
Quite a bit. So the comments by Netanyahu, as well as comments by both American and Iranian officials over the weekend, are clarifying the positions from which the negotiations will start, as when American and Iranian officials begin their second round of indirect talks in Geneva later this week. Similar to what Netanyahu said, we have seen that U.S. President Donald Trump also elaborating on his earlier position on the issue of nuclear enrichment. And he basically said that he doesn't want to see any enrichment at all in Iran. Now, that Iran has always stated to be a red line, citing its right for nuclear enrichment under the Non-Proliferation Treaty. But having said that, we have seen the Iranian Deputy Foreign Minister over the weekend signaling some flexibility on the issue, but linked that to a potential or possible easing of sanctions on the Islamic Republic by the U.S. So we have seen with Netanyahu's remarks and others over the weekend is that clear red lines going into the meetings, likely starting tomorrow, surrounded by some room for maneuver, both by Iran and others that are going to be a party to this meeting. And this meeting starts with basically both sides knowing that the stakes are very high. In the absence of a compromise deal to avert another war, we're going to very likely see a direct military confrontation between the US and Iran, with the possible participation of Israel, just like we have seen during the 12-day war in June of last year.
Yeah. Well, let's also turn our attention to Trump's so-called Board of Peace. He's also saying over the weekend that members have pledged over $5 billion. So what does that mean in effect?
Well, the money alone doesn't mean much, except for the fact that President Trump wants to use these pledges that he claims are already in place to inject some momentum into the whole idea of Board of Peace that he initiated and declared earlier. But money alone will not be enough for Gaza to be rebuilt. There needs to be a clear end to the war. And for that to come about, we need to see both Hamas and Israel to basically come to a conclusion, a compromise on what the path ahead looks like. And they are very far away from coming to a compromise on some of the key issues in Trump's own peace plan, such as the withdrawal of Israeli forces from Gaza and Hamas's disarmament. And this is something that the Saudi foreign minister over the weekend in Munich also pointed at. He pointed at the impasse, and Saudi Arabia itself refrained from making any contribution to this fund before there's any clarity on some of those tricky issues. So the February 19th meeting in Washington, D.C. is hopefully going to be a platform for some clarity on some of these tricky issues to be introduced.
Bloomberg's Middle East Managing Director, Onur Ant, thank you so much. Well, coming up, French President Emmanuel Macron will attend this week's AI summit in India as the two countries continue to deepen ties. We'll have more on that. That's coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some of the other stories we're following this morning. French President Emmanuel Macron will attend this week's AI summit in India as the two countries continue to deepen ties. Macron's official schedule also includes a meeting with Indian Prime Minister Narendra Modi. His visit comes after New Delhi approved $40 billion worth of arms purchases, including more than 100 French fighter jets and missiles. U.S. Secretary of State Marco Rubio and Japanese Foreign Minister Toshimitsu Motegi have reaffirmed their commitment to deepen bilateral ties. The two agreed on the need to modernize economic security relations and discuss China's latest trade and export measures against Japan. Tokyo's relations with Beijing have been rocky following Prime Minister Takaichi's comments on Taiwan. And China says it will allow visa-free travel for Canadian and UK citizens starting tomorrow. Nationals of the two countries holding ordinary passports may enter China visa-free for business, tourism, and family visits for stays of up to 30 days. UK home sellers refrained from increasing prices further this month as an abundance of properties on estate agents' books strengthened the bargaining powers of buyers. Now, according to a survey by website Rightmove, the standstill followed a 2.8% surge in asking prices in January when post-budget optimism unleashed a wave of pent-up demand. And coming up on the show, Ukraine strikes Russia's Black Sea coastal region with drones ahead of peace talks in Geneva on Tuesday. We'll bring you the latest next. This is Bloomberg. Live from Dubai, this is Bloomberg Daybreak Europe. I'm Jumana Bersachi with your top stories today. Asian stocks and U.S. futures edge higher after benign U.S. inflation reinforces bets on more Fed rate cuts. In Japan, the yen slides after data shows the economy barely grew in the last quarter. Marco Rubio heads to Hungary. America's top diplomat says Europe's fate is intertwined with the U.S., but accuses the continent of drifting from shared Western values. And the plot thickens. Bloomberg learns Warner Brothers is considering reopening sale talks with Paramount Skydance, potentially igniting a second bidding war with Netflix. We'll bring you our scoop. Well, as for markets, this is how things are shaping up. We have the Lunar New Year in Asia, which means that Chinese markets are closed for the next week or so. Many of other markets in the region also closed as well. So thin handover in terms of liquidity from Asian markets. Today, S&P futures leaning towards positive, up 15 basis points. Attention on that more benign inflation data that came through on Friday. It gave a bit of a boost to markets and, of course, rate cut expectations for this year. European markets not doing a whole lot today. So trading sideways, this after an outperformance versus U.S. markets last week. And, of course, the big focus in the U.S. was the tech drawdown that we saw, the NASDAQ ending the week down 2%. And then gold today down about 1% with some profit-taking coming through around that $5,000 mark. Now, time for your front page news. Financial Times leading on recruiters for Russia's Wagner Group, shifting their focus to recruiting vulnerable Europeans to carry out sabotage attacks on NATO soil. Recruiters involved with the fighter group are said to be targeting agents for operations on NATO soil. The Wall Street Journal's front page is on markets, calling them chaotic, and how investors are learning to cope with surprises. 1 year into the second Trump administration, traders and investors say they are getting used to, quote, event risk, outsized market swings triggered by unexpected news. And finally, The Times is leading on a social media ban for children under 16 in the UK, which it says could be introduced as soon as this year. This as Keir Starmer seeks to stabilize his premiership. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. That is on the terminal. Now, Russia's Black Sea coastal region came under heavy attack from Ukrainian drones on Saturday night, with damage reported to infrastructure at the Taman seaport. The strikes come as Russian and Ukrainian negotiators are expected to gather again in Geneva on Tuesday for peace talks. For more, we're joined by Tony Halpin, our Russia economy and government team leader. First of all, Tony, what do we know about those strikes, Ukraine's attack on Russia over the weekend?
Yes, they were targeting Black Sea port facilities and fuel tanks. It's part of a sustained Ukrainian campaign to try and weaken Russia's war machine, to reduce its ability to continue fighting in Ukraine. And it's in response also to what has been a very sustained Russian campaign targeting energy infrastructure in Kiev for some months now, particularly aimed at civilian populations to try and freeze them or into submission or to weaken their morale. And that has led to some really very harsh conditions in Ukrainian cities for several weeks.
And of course, as the war continues, there are more rounds of negotiations that are set to take place in Geneva this week. What are we expecting?
Yeah, it's another 2 days of talks, pretty much the same groups of people on all three sides, somewhat expanded by the Ukrainian and Russian delegations. Mm-hmm. They've had discussions about military technicalities on whether they could hold a ceasefire or not and what that would involve. This will move much more to some of the political questions, in particular the outstanding question of territory.
Yeah. So no great progress on that front. Interestingly, I thought it was interesting to see China, which has so far sort of kept at arm's length distance from the war, now saying that they are willing to support or increasing support for the Russia war.
Well, they're sort of talking in two directions, really. On one side, they're saying we're willing to do what we can to support peace talks. But Western officials are saying that, in fact, what they're doing is increasing their support for Russia to help it sustain its war. And in some ways, this suits China, because the more Russia focuses on the war in Ukraine and the more the US in particular has to deal with this question, then the less they have bandwidth to deal with China in Asia, which is, of course, Beijing's big concern.
Yeah. Tony, thank you so much. Tony Halpin. Now, U.S. Secretary of State Marco Rubio has downplayed the chances of a fracture in the U.S. and European alliance if Ukraine loses the war with Russia. He spoke exclusively to Bloomberg on the sidelines of the Munich Security Conference.
The Russians are losing 7,000 to 8,000 soldiers a week. A week. Yeah, not wounded, dead. Ukraine has suffered extraordinary damage, including, overnight, and again, to its energy infrastructure, and it will take billions of dollars and years to rebuild that country. So I don't think anyone can claim to be winning it. I think that both sides are suffering tremendous damage, and we'd like to see the war come to an end. It's a senseless war. In our view, the president believes that very deeply. He believes the war would have never happened had he been president at the time. So we're doing two things. So obviously we continue. Look, we don't provide arms to Russia. We provide arms to Ukraine. We don't sanction Ukraine. We sanction Russia. But at the same time, we find ourselves in a unique position of serving as probably the only nation on earth that can bring the two sides to discuss the potential for ending this war on negotiated terms. And it's an obligation we won't walk away from, because we think it's a very unique one to have. It may not come to fruition, unfortunately. I hope it does, and I think there are days when I feel more optimistic about it than others. But we're going to keep trying, because that is, in the end, this war will not be solved militarily. It will be, in the end, it will come to a negotiated settlement. We'd like to see that happen as soon as possible.
Do you worry that if Ukraine loses the war, it's going to be a disaster for the transatlantic relationship? Because Americans will say the Europeans didn't provide enough arms, and Europeans will look and remember the meeting in the White House and Zelensky and Trump, and they will blame the other way.
That would ignore reality. Look, Ukraine, first of all, they deserve a lot of credit. They fought very bravely. They've received extraordinary amount of support from the United States to the tune of billions of dollars that pre-exist the war. In fact, Ukraine probably wouldn't have survived the early days of the war had it not been for American aid that came to them even before the war had started, with the Javelin missiles that disabled the tank formations.
I wasn't saying it was fair. I was just saying there's a possibility. You have to deal with perceptions.
No, but I'm not worried about that, because I can tell you that I think history will understand it. But I don't think the war is going to end in a traditional loss in the way people think.
U.S. Secretary of State Marco Rubio speaking exclusively with Bloomberg News' editor-in-chief John Micklethwaite in Munich. The German defense minister says he considered U.S. Secretary of State Marco Rubio's speech a sign of full support for NATO and the transatlantic alliance, saying he would not look back at the comments from J.D. Vance last year or the tensions over Greenland. He spoke to us on the sidelines of the Munich Security Conference.
I don't look backwards. I heard a speech with a reassurance tone, gave a commitment to NATO and to Europe, even pronounced that the US will always be a child of Europe. I mean, you can't expect more liaisons, more connections between the both of them. So I'm quite fine with that. And still, it's about achieving more reliability in our relations.
The German defense minister says the fighter combat air system, the Ekes project, was not dead yet, but argued that this would not be the end of the world or Franco-German friendship if it came to an end.
Now we are at a decisive point at which we have to decide what is going to happen with Ekes, what is the way ahead. We will decide that in the weeks to come, yet Ekes is not dead. If Ekes came to an end, that would not be the end of defense industrial cooperation in Europe. It would not be the end of the world or the end of the German-French relationship and friendship.
The French delegate minister for defense, Alice Ruffo, a close ally of President Macron, told Bloomberg that France was ready to throw its weight behind the Franco-German fighter jet project known as Ekes, despite multiple reports highlighting Berlin's skepticism. Ruffo spoke with Bloomberg's Francine Lacroix on the sidelines of the Munich Security Conference.
For France, it's totally critical to be involved in big and important European projects, and so we stand for it. And I mean, this cooperation, the industrial part is difficult. We know that, but the responsibility of the governments, of the leaders, is to try and push very, very much, because it's not only a signal for France and Germany. I mean, it's for Europe, and we need to take our responsibility and to do, anything we can to deliver.
On top of threats from Russia and China, Donald Trump's America First policy has made Sweden warm to the idea of adopting the euro. Swedish lawmakers say the switch will give the country a seat at the table when it comes to pan-European monetary matters. Joining me now is our reporter, Charlie Duxbury. So this is an interesting development in Sweden. What has changed there since voters actually rejected the euro in a referendum going all the way back to 2003?
Yeah, hi. Well, I think what's new here is the geopolitics of it all. I think you're seeing some lawmakers in Sweden are looking at the rise of China, they're looking at nearby Russia, and most recently, and probably most significantly, the US claims on Greenland, and they're thinking that binding themselves more tightly to a big economic bloc in the form of the Eurozone might be a good move at this stage.
And it seems to be also a possibility from the government as well. The finance minister backing an inquiry into euro's adoption. Business leaders seem to be on board too.
Yeah, so the finance minister has opened the door to an inquiry, probably after an election in September, if she's still in power then, to look at the pros and cons. Obviously, there's the geopolitics, and then there's the economic arguments for and against, which they think need another look.
Yeah, what about the general public? The public happy to subscribe to the euro and relinquish the krona?
There is still quite a lot of caution when you ask people here how they feel about adopting the euro. I think memories of the Eurozone debt crisis are still fresh in people's minds here. So if lawmakers decide to back a shift to the euro, they will need to convince voters that the Eurozone isn't the same as it was back in 2010 and that it's a more stable place today.
Yeah. Charlie, thank you so much. Bloomberg's Charlie Duxbury on our Bloomberg Priority feature today on Sweden and the potential, or they're looking into the possibility of joining the euro. Now, coming up, a new episode in the battle for Warner Brothers could be opening after Paramount's amended offer. We'll review the latest twist in the drama just ahead. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some corporate news that we're following today. Dubai's government has appointed Isa Kazim as chairman of DP World, an executive who holds several roles at the heart of Dubai's financial sector and one with a track record in handling delicate situations. This after Chief Executive Sultan Ahmed bin Sulayem resigned after his alleged links to disgraced financier Jeffrey Epstein emerged. Yuvraj Narayan will take over as DP World's CEO. The UK is to crack down on AI chatbots sharing harmful content, pledging to ensure they comply with laws designed to protect children online. Speaking later, Prime Minister Keir Starmer is set to say all AI chatbot providers will need to take responsibility for moderating and preventing illegal content in line with the Online Safety Act. Hapag-Lloyd is in advanced talks to acquire Israeli competitor Zim Integrated Shipping. As sources say the parties are expected to sign off on a deal as soon as this week after several months of negotiations that Zim held with potential buyers. The Israeli business daily Kalkalis says the sale price would exceed $3.5 billion. And Bloomberg has learned that Warner Brothers Discovery is considering reopening sale talks with Paramount. Sources say Paramount submitted amended terms last week. The move could spark a fresh bidding war with streaming giant Netflix. Let's go to Bloomberg's deals editor, Manuel Begori. So once again, Manuel, what do we know about Paramount's amended offer now?
Yes, Joanna, it's another episode in this saga, and very interesting. It's kept us on our toes for so long, right? But another twist and turn here with Warner Brothers board for the very first time, trying to see whether it could consider the potential offer from Paramount as superior, right? And that opens potentially a new chapter in this, given that they have an agreed deal with Netflix. We were able to learn that Paramount came with kind of like a tweaked offer, so to speak, in which they would offer, among other things, to pay, for the fee to Netflix in case that agreed deal were terminated. $2.8 billion right there. On top of that, they would also backstop the debt refinancing by Warner Brothers, and beyond, they would also try to close the deal and get all the regulatory approvals by December 31st, by the end of the year, which obviously highlights how confident they are in closing this deal. Yet, it remains to be seen whether or not they will engage and Warner Brothers will actually make the step forward to re-engage with Paramount. That would be potentially the next step, in which case they would have to first notify Netflix as well.
Well, this is the thing. Doesn't Warner Brother already have a binding agreement with Netflix? So how does this work, and how likely is it that the renewed offer is going to change their view of who to go with?
Yes, indeed. It's not the first, it won't be the last time that something like this happens. Obviously, there is consequences because, as you well said, Jumana, there is a legal binding agreement on the table. So for that to be terminated, obviously the parties will have to rearrange and obviously compensate Netflix over doing that. And that's why Paramount has offered to potentially, take care of that, among other things. Obviously, there could be more twists and turns because Netflix could potentially come back with another offer. Who knows, given all the twists and turns that we've seen here before. But yet, it's something that we've seen in takeovers before, especially on these bidding wars.
Bloomberg Deals editor Manuel Baigorri, thank you so much for bringing us the latest twists and turns with the Warner Brothers story. All right, let's check in on markets. It is a holiday in the U.S. today. It's President's Day, so we will not see cash trading for these equity indices, but futures are trading. And of course, we did get the slightly softer than expected CPI print come through on Friday. So we've seen further interest rate cuts expectations added this year. They're about 60, a little more than that, 60 basis points worth of rate cuts priced in for this year. The other big story, of course, was the tech rout that we had last week. NASDAQ ended the week down 2.1%. Today, things are stabilizing both for the NASDAQ and the S&P as we head into another week of big data to watch out for, PCE on the docket, as well as the Fed minutes. European markets, too, inching towards positive. And this week, as we said earlier on in the show, watch out for a lot of the earnings coming through from miners. And many of them are actually on the FTSE 100. The FTSE, one of the outperformers last week. So the run-up in precious metals and industrial metals should be benefiting some of the mining stocks that we'll be reporting throughout the course of this week. And then take a look at Brent today. We are just shy of $68. Geopolitics still very much in focus. Another round of negotiations set to take place between U.S. and Iran. The Israeli Prime Minister over the weekend setting out his conditions for what he would like to see in the deal. So let's see whether anything comes out of those Geneva talks in the next couple of days. We probably do have a couple of dollars of geopolitical premium priced in to our oil is trading. And then gold, just shy of $5,000 here. We were about 0.9% weaker. And this after we saw some profit taking on back of that weaker than expected inflation print on Friday. I will tell you that in terms of performance, gold has now regained half of the losses since that rout. And at one point, we were dragged below $4,500 per ounce. So we're back up to $5,000, regained about half of the ground loss, seem to be stabilizing around $5,000 here. But that is where we are and getting set up into the week ahead. Right, plenty more coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's talk you through some of the key charts that have been on my radar, especially since that CPI print on Friday came in slightly weaker than expectations. Let's just take a look back at the trends. And what you can see is slowly, we seem to be trending towards that 2% mark. This is the super core, i.e. if you take that inflation print and remove all of the extremely volatile components like food and energy and others, you can see that the trend is slowly drifting lower, which actually there are two sides of the same coin. It's still at 2.6%, so that gives ammunition to the hawks to say that rates still need to be on hold, whereas the fact that it's drifting lower is giving ammunition to the doves to say that we need to be mindful of the fact that inflation is quite muted at this point, month to month growing at 0.2%. So that's your inflation chart. Of course, the big market phenomenon last week was the tech rout that we saw. This chart really puts things in context. Take a look at that ETF tracking software stocks, that yellow line, down significantly over the course of the year, down more than 23%. But basically the drop all happened in the course of the last couple of weeks, and just tells you about how investors are really beginning to price in AI disruption in certain sectors of the economy, software here, the main one. And then you have a few specific names. You have Amazon in white and then Microsoft in blue as well. Also some of the names that are being hit because many of them have announced these huge capex spending plans for 2026. So that's your AI chart. And then switching over, let's also talk about Fed. We get many Fed speakers coming up this week, and I think the market probably is going to pay a lot of attention to that. We have the minutes coming through as well. And what's interesting here is we have a sentiment indicator. It's, I guess they just track the language that's coming through from a lot of these policymakers, whether it's hawkish or dovish. And what's happened recently since the beginning of the year is a lot of the language coming through from policymakers has turned more hawkish. Many of them are saying that there is no imminent need to start cutting interest rates. The likes of Beth Hammack, for example, saying that she expects rates to be on hold for the foreseeable future. So the language is turning more hawkish, but the pricing is still around 60 basis points worth of rate cuts. So that's your charts. And in terms of major risk events for this week, just to recap, Asian markets are closed for Lunar New Year. Chinese markets are going to be closed for the next week or so. A lot of mining earnings to watch out for. BHP today, Antofagasta on Tuesday, Glencore coming up, Rio towards the end of the week as well. So keep an eye out on those earnings. And then on Wednesday, UK CPI print to watch out for as well. There will be a reweighting of that basket. And Robinhood wants to get more retail investors on board in Britain. We'll speak to its UK president about how they plan to do that.